Good evening, everybody. Please confirm that you can hear me. You can type. It is good you type. I muted everybody to avoid distraction, but you can hear me. Just send a text that you can hear me.
Daddy.
Yeah.
Daddy. Daddy.
Daddy.
Daddy. Daddy.
All right, good.
Daddy.
Hello, can you hear me? All right, good. And you can see my screen. Just type you can see my screen so that we can move on very fast. Okay, good. So we've started to look at basis period. So today we just want to wrap that basis period up and then move to capital allowance too. So that's what we want to do tonight. We also want to wrap all these up together, right? So let's do illustration 2 on this. XYZ have been in business for several years. He has decided to change its accounting date Please, can you hear me? Just type you can hear me so that we can move on. Okay, good. So we want to look at this illustration, change its accounting date to comply with the requirement of the regulators. You are provided with the following relevant information to guide the determination of tax liabilities. So here to 30 September 2019, you have 4.5 million. Then here to 31 December 2021. All right, so you have 8.6 million. Then year to 31 December 2022, you have 6.2 million. And finally, you have year to December 2023, 7.6 million. Right. Required. Determine the basis period and accessible profits for the relevant years of assessment. All right, so can we move on? Can you still hear me? Can you still see my screen? Okay, good. So if you can hear me and see my screen, so can we first of all determine the year of change? Can somebody tell me what the year of change is based on what we have here? You can use the chat room so that the class will be fast. Use the chat room. I will accommodate questions, but again, to make the class very fast. So let's use the chat room. We are lagging very much behind. So we have people say 2020. So we have one person say 2021. If you're on YouTube too, I would like to see your comment on what will be the year of change. Right, 2021. I'm seeing 2021. I'm seeing 2021. It's still participatory, just that you are typing instead. So I'm seeing 2020. People on YouTube are not participating yet. All right. 2020. Perpetua is saying 2020. Okay. Okay, day 2021. Esther is saying 2020. Deborah is saying 2021. Okay. As expected, I'm not surprised. I would have been surprised if I have a different reaction. So now don't forget the logic I gave you the last class. I said you are going to be the accountant, I will be the task consultant. Right? So I'll be asking you, do you have this? And you tell me yes or no. So do you have 2019 accounts, 30 September 2019? Do you have 30 September 2019? Do you have 30 September 2019? Okay, good. So do you have 30 September 2020? Do you have 30 September 2020? So that's the year of change. It's the year the company refuses to make up its accounts to the usual accounting year end. The year the company refuses to make up its account, the usual accounting year end. So having determined the year of change, don't forget that once we have determined the year of change, what we need to do basically is that we have to do some computation, right? We have to do some computation. So we say determination of basis period and accessible profit for 2020 to, because it's going to be on PIB to 2024 years of assessment. Obviously, we have YOA. We have YOA. We have basis period. And we have accessible profit. Can you still hear me? Good. If you can hear me, just give me a thumbs up. Okay, good. Thank you. So year of assessment, basis period, accessible profit. So we start with this. So since the year of change is 2020, we'll just start with old date, right? Since we are starting with 2020, and we've all agreed that 2020 is the year of change. Don't forget, we are going to be doing it on preceding year basis. So we'll have from 110 2018, right, to 39 2019, because it's going to be a year, 12 months period, to 39 2019. So we have, how much do we have the figure there? Yes. Can you see my screen now? Can you see my screen now? Okay, good. All right. So we start with 2019, and then we have how much? 4.5 million. In 2021, you pretend as if nothing happened, right? So you do 110, 2019 to 39, 2020. And if you do that carefully, you would have, what will you have there now? So I have 12 months here. So how many months do we have between 2019 September and December 2021? We have 12 months twice and 3 months. That's 27. Then times 8.6 million. Is that correct? Please confirm. Is that correct? Please confirm if that figure is correct. All right, good. So what do you have? What do you have in your calculator now? So here now I have 12 over 27 times 8,600. So I have 3,822,822. 3,822,222. Right. Then 2022, I'll have 110. I'll pretend as if nothing happened to 39, 2021. And also I'll have 3,822,222. So if you add that together, what do you have? You have 12,144,444. 144,444. Right. Then I'll use the new date. All right. For the new date, so we'll do 2020 again. Now we'll follow the new accounting year, and the accounting year is 31 December, because that's the new date, 2019. So I'll start from 1st January 2019. What that means is that I'm picking, right, 9 months from the first figure. So I'll say 9 over 12 times 4.5 million. So what do you have? 9 over 12 times 4.5. You have 3,375,000. 375,000. And then for 2021 year of assessment, you do 1/1/2020 to 31 December 2020. What you have is 3,822,222. Is Tony on this call? Is Tony here? Okay. Please, can you hear me? Okay, good. No problem. So we have, please don't be distracted. The journey is far. Then 2022, because what I'm doing here basically will be 12 over 27. Sorry, I've made a mistake somewhere. I'd forgotten. So plus 3 over 27 times, what do you have there now? Figure 8.6 million. So what do you have? So the we have 3 over 27 times 8.6 plus 3375. That's 4330, right? 4330,555. Basically, right? Then the next time you will now have something that looks like 8.6 million again, and that will give you for 2021 2 now. You have assessment, you have 1/1/2021 now to 31 December 2021, and you have 12 over 27 times 8.6 million. So what do you have? 3,822,222. So when we add the three together, what do we have now? When we add the three together, please help me with figure 433055.555 plus 3,822,22. No, let me do this way. If you want to follow board maths, if you want to follow board maths, I mean 3,822,122 times 2 plus 4330,555. So, 3,822,222 times 2 plus 4330. Close your by now. 3,822,222 times 2 plus 4330,555. So you have 11,974,999. Invariably, we will go with the old date because the old date is higher. Don't forget you are going with the higher of the two because you are the tax authority. Tax authority select, right? So based on that, then you now use the new date regardless, right? You will use the new date regardless. So 2023 now, I will say 1/1/2021. 22, beg your pardon, to 31 December 2022. I have my figure, new date 6.2 million. And then in 2024, I will also do use the new date regardless. 31 December 3. That's 7.6. All right. Any question? Do you have any question for me at this point? I'm done with that. Any question for me, both on YouTube and in on Google Meet? Any question? You can hear me? Okay. I was outside. It was as if somebody is trying to press something. Like we are now being Game of Thrones. Like, come on. So let me welcome your questions. So
I want to ask a question.
yeah,
Wait
please go ahead.
now. I'm the person to raise up my hand now. Let me talk. Can I go ahead and ask question?
Yes, please.
Oga, start from
If
the
your hand is
beginning.
raised,
Yes, I'm the first person, Sir. Can I go ahead?
yes, please go ahead.
Okay. The 27 months, please, how did you get the 27 months? I just want you to, although some people
Please
have
go ahead. I
told me
can
how
hear
they,
you.
yeah, some people have told me how they got the 27 months, but I don't really know the basis behind it because they counted more, they just counted it like from 2019 down to
Yeah.
2022. I want to know why. Thank you.
So the 27 months there is from October to December 2021. So we have October, November, December. That's 3 months. Then 12 months. We want to know why. But that's how. Now the year two means this period ended September, right? What you have here ended September, and the next one you have is December. So you have to count for. You have to cover that gap. That's why. Do you understand?
Sorry for saying
So
no.
the period that you have there is from what's the name now? From October 2019 to. Can you hear me?
Yes, I can hear you.
Please, can you hear me?
I can hear
Can
you.
you hear me?
I can hear you. I can hear you.
I was saying that you have to count from. I was saying that you have to count from October to December. So you have to count from October.
Yeah, good evening, all. Please, if there's someone that understands his question, can please explain before he comes. Thank you.
People like us are just joined. The people should help us so I can follow. I don't, we don't even know what's going on.
Okay. Oh yeah, let me stop before he comes back. So what he was doing, I don't know, maybe you have the question with you. Do you have a screenshot?
I have a screenshot of the question.
All right. So now, your question is, how do we know the failed year?
27 months. Yes, 27 months. Yes.
How do we know the
And why?
failed year? Right?
Yes.
All right. Just take it like this. A company has been making the account to September of every year. So
Okay.
in 2016, they made it to September. In 2017, they made it to September. In 2018, they made it to September. In 2019, they made it to September. Now, in 2020, they were unable to make it to September. So what is their failed year? Oh, yeah, now.
Wait, there is no commencement date. That they did not give us a commencement date.
Yes, they did. Yes, no commencement. Don't worry about commencement. Just use this scenario I gave you now.
Must it be 12 months?
Yes, every basis period is 12 months, of course.
Okay. Okay. Under the old rule.
On this change of accounting date, if it is commencement of business now, you can
Yes.
have different things, or cessation of business, you can have different things. But this is change of accounting date. The basis
Okay.
period in your computation must be 12 months. It will even be 12 months. So
Hello,
how
can
do
you
you
hear me?
identify? Yeah, okay.
Can you hear me now?
You're welcome, sir.
Yeah, we can hear
Yeah.
you, sir.
Okay.
You're welcome.
Yeah. So I was saying that did you get the answer to my question?
Yeah, we are with you. We are with you before the network sends you away. We are following you.
Okay.
Only
So what I
you.
was saying is this: how I got the 27 months. That's what you asked, right? So
Yes.
ideally, for changing accounting dates, the idea is that you must always count a year, right? And we are going to do that on the back of both the old date and the new date, right? You are going to be using the old date and the new date. But again, you must always ensure that all the days are catered for beginning from the year of change, right? The year of, and you are doing it on PYB, meaning you start from 2019. That said,
Okay.
the next thing you will now do is that you count from this September 2019 to December 2021. How many months do you have there? That will be your
Okay.
denominator. And whatever you are picking for, to make sure it's. Can you hear me?
Yeah, we can hear you.
Sorry, Mr. Alakule, please come again, please.
I said that your 27 months is going to be, you are counting from October, because that's the month after 2019, December. You realize that here we did 9/12. Let me pull that up, because don't forget, you must always cover 12 months. You must always cover for 12 months between months, and that's why we did 3 of it, right? Yeah, that's it. But this is not the question. Where's the question for this one?
Sir, please, sorry.
Okay.
Good evening, sir. Sorry,
Yeah.
can I draw your attention to the old date from the
Yes.
2019, 1st October 2019 to the 30th December 2020. If we calculate the months, sir, it's not giving us 27, sir. I don't know if we should go back to and check, sir. Sorry.
Is our teacher here? Wala be like bicycle. Please, someone that understands you
The
explain to
network
someone.
is not allowing him. So I don't know if someone can actually explain, but
Exactly.
I noticed when you compute October 2019 to September 30th September 2020 is not giving 27 months. Abi, is
2021.
it
It's
till
2021.
2021? December
It's
till December
2021.
2020?
Good evening, everyone.
2020,
We know
December 2021.
we know some of us now they get 27 months now, but why did they use 27? You
It was
understand?
first
Because
and not
The date
somebody
more
of
higher than
change,
the
the date
27
of
though.
change is
Good
till
evening, everyone.
2020.
Good evening, everyone.
good evening, ma.
Can I contribute?
Yes, go ahead. You are free. You
Please.
are 100%
Thank
free.
you.
Please.
All right. The initial accounting year ended 30th September. Then the new one that they changed to is now 31st December. But they didn't prepare accounts till 2021 December. So you're counting from October till December 2021, no longer September. That 8,600,000 is from from October 2019 to December 2021. Calculate it, use your fingers and count it. It's 27 months.
Thank you so much, ma.
Okay.
This has
Okay.
actually made me understand because
Okay.
I thought maybe it's this September 2020, but
No.
since there is no account for 2020, that means it's from that 1st October 2019 till 31st December 2021, if I may get
Correct.
you right.
So it's
Correct.
because there is
Please,
no account.
madam,
It's because there is
kindly
no account. It's because they did not
help
prepare
us drop
account.
by your explanation in the chat box, please. Help us drop
Hello.
by the explanation in the chat box.
Hello.
Thank you.
Let me
Ma,
finish.
it is because
Because
they did not prepare account in 2020, Abby.
yes, so both 2020,
Okay.
2021, and 3 months remaining in 2019, they are all embedded in that 8,600,000.
Mm.
Is that clear? So for you to separate it, you will remove 12 months for 2021, 12 months for 2020, then 3 months for that October to December 2019. That's why we
Okay.
separated them that way. So if we're doing in old accounting dates, it will start from October to September each year. If it is new accounting date, it will start from January to December each year. Do you understand now?
Yeah, I get. You've already cleared it. Thank you. You said because they did not prepare accounts. I get it now.
Yes,
Thank you.
yes.
That's the best word to use. Thank
All
you.
right. You're welcome.
Hello. Hello.
Hello. Yes,
Yeah.
please.
Please, which question are you people treating?
Let me
XY.
share my screen.
XY says.
Yes.
I just want to contribute. Maybe I'm right or not. Though I
Let
didn't know the question. I didn't know the question, but I'm hearing 2019, 2020, 2021.
change of accounting date. It's change of accounting date. Initially, they were
Okay.
preparing accounts to September. Then
Okay.
they changed to December. So the first figure they gave us was for 12 months that ended September 2019. Then the second figure included 27 months from October 2019 to 21st December 2021, 31st December 2021. So
Okay.
the whole of 27 months are embedded in the second figure.
Okay.
Then
Okay. Okay.
do you get me?
Yes. Thank you.
All right, all right.
Thank you.
Okay.
Please continue from there. Someone should share the question so we can be looking at it before our guy comes.
Do you?
Please let me
You
just
don't
ask
understand
a
how
question.
you got to tell almost now.
I don't have the question. No.
Please,
I just wrote it down when he was sharing. I
Oga
don't
is
have it.
already inside though. Oga is
hello,
already
can I ask a
around though.
question?
Okay. Yeah, the question is there now.
Do you?
Okay, please. Are you hearing me?
Yes, please
Yeah.
go ahead.
Okay, please. I have a question, and my question is: now I've understood how we got 27 months, but I can't understand these applications, how it's applied here. I'm not even understanding this. I'm just taking the notes, but I see the old date and I see the new date. Someone should just explain for me so that I can catch up with the rest of the class. please. Thank you.
Mr. Michael is back now.
Go ahead. She said
Okay.
somebody. She didn't mention my name.
Okay. What we are trying to, just the way the other lady has explained, Ineka has explained. Here, what we are trying to, what the examiner is trying to test here is change of accounting date. When you say change of accounting date, this is the date at which an entity will always close up its account for tax returns purposes, right? Now, this entity has been preparing and closing up its account on a yearly basis at September every blessed year. So it must have been filing returns based on that accounting date of September. So the very first time since inception of that business, and he has been doing returns, that it will fail to close up his account at the usual expected year was the year 2020, year 2020, I think 2021, I guess, right? Yeah, 2021. And that was the year that was
it's 2020.
2020, rather, yes. Sorry, 2020. That was when we could see that he did not end up his account as at 30th September normally. She gets now. But since the last time he actually filed return, during 2019 against 2020, he did not prepare any other return until he did not prepare any other account until 30th December 2021. So he must have been accumulating his taxable profits over time until 31st December 2021. That's what we are having as 8.6 million cumulatively after the last returns he had done in 2019. So when you count it from the first day of October 2019 to the very date that he now ended or closed up his account as at 31st December 2021, gives you 27 good months. It therefore means those profits had accumulated over time. So what we are now trying to do here is now to say
I don't think that's the answer to his question.
That was I'm just trying to explain it broadly.
I like the way you are explaining the foundation of it. Thank you.
Okay, now
go ahead.
Now, cumulatively, the profit he had accumulated over time before he closed up his account as at 31st December 2021 was 8.6 million. But now we have noticed that in between September 30th, 2019 and 31st December 2021, there had been a change of accounting date. And the year that he prepared last and the year we did not see that he prepared will give us the clue to when he had actually failed to prepare the account, and that was 2020, according to the question. So if that has been understood, it therefore means that when you are approaching FIRS or approaching tax authority to file your returns, you are going to be filing two sets of returns. First returns based on your old accounting date, which has been 30th September. You are going to on the preceding basis. Then you're going to also file another returns based on the new accounting date, which always ends 31st December. Check it now. So we have identified that it is 2020 that the failure first occurred. So from 2020 to the next 3 years, 2020, 2021, 2022. Now you are going to prepare these two separate returns using old accounting date and using new accounting date. Now, when you prepare this one and you allot your profits based on the basis period you have formulated, the one that now produces the highest amount of money. So the tax authority have the election to elect of the two, and they will elect based on the one that produces the higher value. And that's what Mr. Michael has done for us.
Thank you very much. Thank you. I appreciate it.
Thank you very much, everybody. Thank you for your patience. Thank you for your explanation. Thank you for everything. I appreciate it. All right. So let's move on quickly.
Sorry, sir. I don't really accept a word he said. I don't know. Maybe it is misunderstanding from my end. He used a word and said you are to file two returns, which is using the old date, using the new date. I don't know. I don't think that's what the principle is saying. I think that the principle is actually saying that when you are computing your tax, you will compute using the new date, using the old date, then you are to pick which one is highest. That word of filing both, I don't know about that.
So he is correct, right? He is correct in the sense that the tax authority will be the one to select, not you, right? Just that there's a rule of thumb that the tax authority, by way of default, will select the higher of the two figures, basically. But you have to disclose, and returns basically mean disclosure. Returns does not mean you have to pay the two taxes. Returns simply means disclosure, basically. To disclose the two to the tax authority for them to be able to select whichever is higher of the two. So by saying returns, I think is correct, or I know is correct. Do you understand? Does it make sense?
Yes, sir. Thank you.
Yeah. Right. So let's move a bit to the next one. We've been on business for 4 weeks, and God forbid bad thing. I'm not going to do anything again on business period
Sorry,
after
sir.
today.
Sorry, sir. Please, one last question. I've understood how we now computed up to the 2022, but on this new date, the 2023 and 2024, how is it going
No,
to
so that's why I
be?
left a line. It is just irrespective of whether you use the whole date or the new date. After the 3 years affected, you continue with the new date. Does it make sense to you? So
Thank
the
you.
2023 and
I
2024,
appreciate it.
they just follow the rule. So let's go to cessation of business. Man proposed, God decomposed. How do you used to say that thing? Because I intend to leave this topic by 7:30, but all of you prayed and my stepmother showed up, and at 7:36 I'm not at the net way. It is what it is. So what is cessation of business? This of business is actually, like the name implies, this occurs when a business ceases to operate, right? So it could be because of economic condition, it could be because of business environment. A lot of things can make businesses stop functioning, right? So basically, that is what cessation is. Are you with me, please? So you could see that the exodus of many companies, in fact, many SMEs are said to fold up between 5 years of their commencement date. But again, let's just look at it simply from our own part of side of things and look at the tax implication. So now, the idea here is when a business is operation, right? What you need to identify is two things. First is penultimate year, and then the ultimate year. Penultimate year and the ultimate year, right? What is penultimate
I
year?
can't see your screen, please. Sorry.
Is that same for everybody or only her?
Can see your screen.
Only
Okay, no problem. So please log out and log in again. Just that you are doing it at your own risk.
sometimes you have to go and
Please.
click the username. You have to click on the person host. The host. You have to click on the host so that it can bring it.
Okay, maybe that works. So penultimate year, the year before the company ceases operation. That's the penultimate year. And the ultimate year is the year the company ceases operation. So based on Finance Act 2019, when a company ceases operation, the company will be assessed to tax. The penultimate year will be assessed to tax is assessed to tax on preceding year basis, right? Ultimate year is assessed to tax dependent on the date of cessation. Depending on the date of cessation. So let's put context to it. Where a business ceases before 30th June, the company will be assessed to tax on actual year basis. That's for the ultimate year. Where a business ceases after 30th June, where the company will be assessed to tax on preceding year basis. And that is because filing for cessation must be completed between 12 months. Sorry, I said 12 months, 6 months, beg your pardon, from the date of cessation, just like your typical filing would be. So you have to do 12 months from the date of cessation. All right, so now that is the idea there, right? But let's put some numbers to this thing so that we'll get. But two things you have to get here. You have to first understand the penultimate year. And the penultimate year is the year before the company ceases operation. I remember when I was in 2011 that time, I used to write, when I was writing for internship, I would tell I'm in my penultimate year at the university because that was when I did tax. And every little memo I want to write, I was in my penultimate year. I'm going to get ACTI these days. But again, the year before the company ceases operation is penultimate. The year the company ceases operation is called the ultimate year. And for context, right, if a company ceases before 30th June, the company will be assessed to tax on, if a company ceases before 30th June, the company will be assessed to tax on, again, if a company ceases before 30th June, the company will be assessed to tax on
30th June.
Actual year basis. The company ceases after 30th June, the company will be assessed to tax on preceding year basis. Does it make sense now? Do you understand what I've said so far? Okay, good. So having said that, let's go. Illustration. Ilelolo Nigeria Limited.
Sorry, sir. Please, can you come again?
On wealth now.
I was going to ask that, is it the new rule that states that if the cessation business falls after June, or
Yes,
before
the
June,
new rule.
after, okay.
Yes, it's the new. It's Finance Act 2019.
I'm just hearing for the first time. Thank you, sir.
Interesting. Finance Act 2019, that's what the law says. Before, it used to be that preceding year basis will be actual year basis and preceding year basis. You now do right of election. But life is now better now. Do you get? Little has been in business for several years. However, due to economic which English now? Downturn in the operating environment, which has resulted in making losses for 4 years, for several years. The management decided to close their shop. operation. You are provided with the following additional information. Right. Year to 31 December 2020, you have 4.1 million. Then year to 31 December 21, 3.1 million. I don't want to treat loss relief or anything now. And period to 30 April 22, 600,000. Required. Determine the basis period and accessible profits. Please, can you hear me? Oh, the relevant years of assessment. Please, can you hear me?
Yes, we can hear you.
Okay, good.
And we can see your screen. Thank you.
Okay. So now let's work on this together, right? Ilelo Law Limited. Ilelo Law Limited. Determination of basis period. And so let me include here and due dates for filing. An accessible profit. So all you need to do here is to determine the basis period and accessible profit for year of assessment. So here you just add one here. So you say for 2021, and you notice that 2022 is before June. So you just say and 2022 years of assessment. Right? So you have why we it is up. So let's go. Why we basis period. Accessible. So what do we have? So we have 21 year of assessment. Of course, going to be on preceding year basis. That's 1/1/2020 to when? 31 December 2020. What do we have? 4.1 million. No story, Abby.
Yes.
Then you now have penultimate year 2022. Right. Then you say 1/1/21. Sorry.
Sir, there is a mistake. Oh, it's
Yes,
31/12/2020.
Yes, I've corrected it to 31/12/2021. And how much do you have here? 3.1 million. So let me, I included the requirements there. So let me also do a table to accommodate the requirements so that it will make more sense. The due date for filing I mentioned. So let's say due date. Don't forget that it's going to be 12 months from the date, from the accounting end, basically. 6 months, beg your pardon. Why am I saying 12 months now? 6 months from the accounting year end, right? So it means this one will be 30 June 2021, right? Then 3.1 million. Then you have 36 2022, Abby.
Yes.
Then the ultimate year you say 2022 again because that's to be actual year basis because it's 30 April this time. So it's going to be 1/1/2022 to 30 for 2022.
30 for
Right?
2022.
Do you get? So you have 600,000. And what will be the due date? That's May, June, July, August, September. That's 39/20/22.
Is up May, June, July, August, September.
Sorry,
Is up
sir.
is October.
6
May,
months.
June, July,
6
August,
months.
September, October. Sorry.
6 months. May, June, July, May,
31,
June.
30 days of September, April, June, and November. So it's 31 October, yes.
Should be
Right. Makes sense, right? Now let's do an alternative here.
Please, I have a question.
Yeah, please go ahead.
Thank you, sir. Good evening, sir. Good evening, everyone. So, my question is for the penultimate year part, the business season operation 2022. Yeah, the penultimate year is supposed to be 2021.
2021 accounting year, but by using tax year. I know tax does PIB. Do you understand?
Well, because we're using preceding year basis.
Exactly. 21 actual accounting year will be 2022 tax year based on preceding year basis. Does it make sense?
Yes, sir. Thank you, sir.
You're welcome.
So you can
Now
ask
let's
a
do,
question, sir.
yeah.
Before, sorry, I'm so sorry. Yeah. Before I think we used to do that penultimate year to be in the higher of. We
Or
do
the
one
AYB and
preceding
PYB,
year.
then you now do right of
Yeah.
election. The tax authority
Yes.
selects
Yes.
there too.
So we are not
Yes.
doing it anymore, sir.
No, all things are passed away.
Financiers are coming. Has coming.
Okay.
Yeah.
So this is how
So
we
this is
do
based
it
on
now.
exactly. This is Finance Act 2019. All right. So now, let's say the same thing happened, but now this guy ceased operation 39/2022. Nothing changed, only that the company ceases 39/2022, right? Illustration same as above, except that the company ceases operation on 30th September 2022. So how will I treat it? Right? That's the question you want to ask. So I will do the same thing. The only difference is the ultimate year. So this will be 2021 to 2023 year of assessment. Just because of that change of information. So 2021, nothing changes. 2022, nothing changes. The penultimate year, nothing changes. But the ultimate year now, the year of assessment now will be 2023. And it will be up to 30 September 2022. Right? It will be 30 September 2022. And the date now, for due date will now be, I'll start counting from October, 6 months. October, November, December, January, February, March. So I have 30.
But sir, is actual basis not applicable to this again?
No, it's not applicable again because it ceases after 30th June. What we are looking at is if a company ceases before 30th June, actual year basis. If a company ceases after 30th June, preceding year basis. So the deciding factor there is 30th June, 6 months into the year.
Yeah, okay.
Does it make sense now?
Yes, in accordance to Finance Act 2019.
Act 2019, and that's what will be tested in your exam in case you see cessation.
Okay.
It is 31st of March, sir.
I didn't get that.
31st of March, 31st, not 30.
Okay, sorry. I know it is coming that my son will still correct me with this 30 day of September. It will be one day. Sorry. All right, thank you very much. Does it make sense? Is it clear now? No.
Yes.
This year of cessation is the ultimate year. Then the year before is the penultimate year. The year before the coming season is the penultimate year. Does it make sense?
Please
Have I
come again
clarified?
with the date when you are using the as in preceding year basis. You caught
So
something of yes, please come again with the
if
date.
a company ceases before 30th June, there's going to be on actual year
Actual year
basis.
basis. Yes.
If a company ceases after 30th June, it's going to be on preceding year basis.
PYB. Yes.
Yeah. Does it make
In
sense?
this example of September, so what is the date? I'm interested in that date, the period.
Which date? So it's 1st January 2022 to 30 September 2022. And it's going to be assessed to tax in 2023. Except if I'm not understanding your question.
Yes. No, when you were calling it, I thought I had another month. That was why it got me
No.
confused. You didn't actually call January. That's why it got me confused.
No. Sorry about that. Possibly my stepmother came in at that point. Sorry. All right. So are we clear now? Do you understand cessation, everybody?
Please,
Yes,
I have
sir.
question you.
Yeah, please go ahead.
Yeah. Well done, sir. Please, I want to ask question based on this Finance Act 2019.
Yeah, go ahead.
Can you hear me? Yeah. In an exam scenario, if we were given question to be 20, are we going to the question they give it to us will based on the year? I don't know if you understand what I'm saying.
Yes, I understand. So it's the year that determines which acts to use.
Okay.
But in reality, I want to say something, but again, I don't want to say starting today.
Please say it. Please say it. Please say it.
It's a joke. Oh, don't take it personal. If the examiner is not a woman, you should be asking things beyond, as in, you should be asking those old things. Do you understand?
Okay.
So, I mean, you should ask the most recent stuff. Is it that say I should say it to? Hope I'm
yes,
safe.
now. I just want to suggest that in case we now enter exam or we announce it 2018, 2017.
No, you cannot see now. Abba. See, it's only women that will give you things that they will expect you to think for them. The examiner is not a woman, it's a man. Trust me.
Okay.
Hey, we take an exception, though. Super Falcons are here.
Abi.
Oh shit.
Okay, thank you, sir.
You're welcome.
Mr.
So now let's quickly move to another topic today.
Mr.
An
Michael.
interesting one at that. Yeah.
Mr. Michael.
Somebody's calling my attention.
Yeah. Just a bit digression from what you have told us tonight. My understanding about this Finance Act 2019, I think it was specifically mentioned that if it were to be an enterprise that is actually season operation, that the due date for filing of the returns for that cessation and the payment thereof is 3 months post cessation. 3 months post cessation.
Okay.
If it to be an enterprise, then if it to be LTD or PLC, is 6 months post cessation that you will return, regardless of when the date of cessations actually occur, which might be before June or before December. So I want you to share more like that again as well.
Again, you are correct, right? And the idea is that for enterprises, they are guided by personal income tax. What they pay is personal income tax, right? And personal income tax gives only 3 months for returns. That's why you realize that director's returns is always filed before 30th March or 31st March, as the case may be. But that's the idea there. The idea is that personal income tax only give 3 months for filing. CIT gives 6 months for filing. So in reality, 3 months for individuals because enterprises are managed by sole proprietors. Make sense? But for companies, it is managed by, again, board of directors and all of those things. So that's why companies will have 6 months for filing, and individuals, enterprises, as you want to call it, business names, will have 3 months for filing. So that position is still correct. But in the context of this class, I will be very surprised if the examiner is start asking you things regarding individual here. What we want to see here is for companies. That's why I restricted my thoughts to only companies. But your position is correct. Does it make sense?
Yes.
Okay.
Yes, sir.
Yeah.
Is a right of election not applicable to
Please,
this?
don't be angry. Let me
Hello,
ask a
sir.
question.
No, right of election is no longer applicable. Right of election was
cessation.
only applicable. Yeah. Right of election was not
Okay.
is not longer applicable. It was applicable when you had the option of selecting between the PYB and AYB in the penultimate year. It was, again,
Okay.
the tax authority will be the one to select. So they will select either of the two. But you get my point. But again, here, we are not, that right has been cancelled. So the penultimate year, we still assume that going concern was not threatened. So PYB should be it. And then the ultimate year, which is the year assessment, should be dependent on the year you cease. And the reason why it's dependent on the date you cease is because of the filing, right? So if you file, imagine if you cease June, you'll file by December. We're still within the same year. But if you cease July, you'll file by January, falling to the next year. That's why if you look at it critically, you realize that anything after June will go into the next year.
Yeah. Thank you.
Sir, please,
Again, if it's December is after 30th June, so it will be June next year. So it's going to be PYB. It doesn't change anything for the person that want to check something.
Okay, please, can I ask a question?
Yeah, go ahead.
I just want to learn something here. This class is very insightful to me. When a business has been registered and has not commenced operations, how would the filing be done based on this new rule?
So the law provides that you should always do your filing, or the latest date of doing your filing is 6 months after the date of 18 months after the date of incorporation. You are eligible to file, right? Do you understand?
That's 3 years after. That's 3 years after.
18 months after your date of incorporation.
Okay.
So it is the earliest of the accounting date, right? The first accounting year end, or 18 months post incorporation. Does it make sense? So in order to avoid all those pre-incorporation levy, all those tax liabilities and all those penalties, it is even better you start filing just do the earliest, which is 18 months from the date of incorporation. Does it make sense?
Yes, sir. It makes sense. So what it means is that, say I just opened a business, like I registered a new company, but we have not gotten the structure yet, and we are still in the process of arranging.
Again, you can only submit your statement of affairs.
But there's no activity going on yet. We're still building.
That's why you are stuck. If activity was going on, you would have submitted your financial statement, your audited financial statement. But if you have no activity, just submit your statement of affairs, just to show them that you've not started anything. And
Please now.
Network.
Oh yeah, abeg. Who go answer my own question? Me, I dey confused. Oh, abeg.
Go ahead, Joshua.
My question is that, before I don't get it. The cessation year is 2022.
Hello.
But if you look at,
It's back.
Yeah, Joshua, go ahead, shoot.
okay, I was saying that the cessation year is 2022.
Yeah.
But if you look at the penultimate year, it's still 2022. So that's my question. I'm like,
It's not a question now. You've only raised an observation, Abi.
Yes, so I'm confused. Although we looked at 2021 profit in that penultimate year.
No, we didn't look at it. Are you talking about the first illustration or the second illustration?
I'm talking about the cessation business and the cessation of business, both the first and the second.
Okay.
We have 2 illustrations there.
I know that the one that was after September. So the one that was in September, the one that was in April. I know what I'm saying.
Okay.
So let's look at the one that is
give
in
us
April
context.
first. All right, thank you, sir. So I was saying that, the cessation day is 2022. Before, we will have said the penultimate year is 2021. Where we now look at preceding year and actual year. But you said that one has been scrapped, which means that 2021 should be the penultimate year, where we look at 2020 profits.
No. So 21 accounting year is 22 tax year. Preceding year basis. Does it make sense?
Yeah, that is confusing him.
Mr. Michael, can I ship in there? Can I come in?
Yeah, please come in.
Yes, the Finance Act 2019 was not emphasizing penultimate year any longer. It does not specify it.
Exactly.
I don't know if Mr. Michael just chose to use that word. The Finance Act 2019 never mentioned anything like penultimate year again. What is to be done in supposed penultimate year is your normal annual returns that you will have filed, even though you have not ceased operation. So the word penultimate is not even coming into place. So the Finance Act 2019 is specific about the very year that you stop operation. And that very year, the law is saying that you will begin the counting, right, from the first day after the last returns you filed. That is a day after the last your last accounting date where you have filed already to the very date that you cease operation. She gets now. So that is what that law is saying. It's not even talking about penultimate. It's only concerned with actual that very year that you cease operation. So if you had removed the word penultimate here, this matter would have solved.
Exactly. So yes, I think you're not. I
There's
think
nothing like
you're
penultimate
correct.
here other than new law. There's nothing like that. Otherwise, we'll be getting the
I only wanted to help you. I only wanted to help the old guys here because I know there are a lot of people that are old. But again, my help now, what's the mommy lower? No problem. Yeah.
Hello.
Yes. Adams.
Hello, can I have my own understanding?
Yes, please go ahead.
I think why we have 2022 tax year. 2021 was transaction will be taxed in 2022. And it is the same 2022 that the company ceases operation. So you also file for the tax year for that period that the company ceases operation in 2022. So that is the reason, Joshua, that was the reason why we have 2022. The first 2022 treated the transaction for 2021 that will be taxed in 2022. Now the company ceases operation again in 2022. For those periods, the first one, we have a period of 4 months. The second one, we had a period of 9 months. You also affect that period to start in 2022 as well, because the company ceases operation in 2022. So I don't know, sir, maybe my own my perception is right.
I'm not sure I got it. But
yes. You are in place. As a matter of fact, this discussion is like when you cease an operation on or before 30th June, when you cease operation on or before 30th June, that same year you are expected to file 2 returns. You are going to file returns
correct.
for that. You are filing return for that cessation year, and you are also filing returns for last year normal returns that you're supposed to file on or before May 31st. Check it now. So 2 returns you're going to be filing in that same year because you cease operation on or before June, and you have already one return that you ought to have filed for that year, which was for last year. Check it now. So you are right. So 2 returns will be filed. That is if you cease operation on or before June. But if you cease operation above June, maybe around September, October, November, it will only mean that you only file returns for the previous year. Then you will not file the returns for cessation in the preceding in the following year. So it's those are just the explanation. Correct. Yes.
Yeah, that's it. Is it clear, everybody? Thank you, Lawale. Thank you, Mumin. All right, Gabriel. All right, so let's move on to make life simple. So let's go to capital allowance. I'll just do the introduction today. And capital allowance is very simple, but time consuming. Very simple, but time consuming. But to make it make sense to us here, this is what I've decided to do. Today I will only do the theory. So I will send an illustration before the class. Please, I expect everybody to have read it before my class on Monday. I expect you to have read the question before my class on Monday so that we can all get the context, at least understand 1 or 2 things before the class. Makes sense, right? So let's just bring some context to what I want to discuss today. You know, we typically would talk about depreciation, and in reality, tax people like myself, we don't like depreciation because depreciation does not make any sense or is an unjust way of determining your profit. I will give an instance. Say I have 100 million revenue and Ineka has 100 million revenue. Then he has 25 million assets. I also have 25 million naira worth of assets. Then my operational expenses is 50 million in reality. Our own operational expenses is also 50 million in reality. Ideally, excluding depreciation, both of us should have PBT of 50 million, 50 million. That should have been our adjusted profit. But Ineka can decide to use reducing balance on a 25 million naira asset. Meaning in the first year, she's likely going to pay lower tax because, I mean, first year, depreciation is going to be bloated by using reducing balance. While for me, because I use straight line method, I'm going to suffer a kind of higher tax, right? Because I've adopted the straight line method in my first year. What has changed basically is just our model for computing depreciation. So we said that we don't want depreciation, right? And instead of depreciation, in the tax world, we came up with the concept of capital allowance. So capital allowance is just a concept we use in place of depreciation, right? So everybody, so far you have a particular asset, everybody in Nigeria will enjoy the same allowance, because don't forget that the higher your depreciation, the lower your profit, right? And the lower your profit, the lower your supposed tax, right? So the same way, if we have the same depreciation across board, permit me to use the word depreciation for a start. I'm still going to change my terms, right? But if we have the same depreciation across board, it means that all of us, we have the same tax, provided we have the same revenue and have the same operating expenses. So that looks a bit more equitable. Does it make sense to you? So capital allowance, just have it at the back of your mind that what the position is to an accountant, an IFRS person, is what capital allowance is to me as a tax person. Does it make sense now? So it's a conventional way of determining the amount of allowances I will get for using an asset, right? So let me write something here. Capital allowance is an allowance granted to a taxpayer for putting an asset to use in a particular year of assessment. It is granted in place of depreciation. All right. So let's look at, types of allowances, because there are many types of allowances. And the beautiful thing is an asset can enjoy 2-3 allowances, depending. Right. The first one is your initial allowance. So this is an allowance granted to a taxpayer in the first year an asset is put to use. This is an allowance granted to a taxpayer in the first year an asset is put to use. Does it make sense? Yes, I've explained it now. It's like you all know book in this class, so you want me to be speaking technical language. No problem. I will explain. I will be using those terms now. That's how I use penultimate here and game problem. So don't worry. These are going to the taxpayer in the first year and assets, or so it's put to use. Kyle mentioned one thing called QC, and that's qualifying capital expenditure. Qualifying capital expenditure. Again, just look at it that simply put, your qualifying capital expenditure is non-current asset. Is non-current asset that qualifies, or let me use the word, that are able to enjoy allowances. So the first thing is it must be non-current in that it must exceed 1 year, basically. So it must be an asset, right, that will span more than 1 year. And the tax authority have felt that it is necessary to put that asset. There's a list of them, right? So if the asset fortunately falls under that list or falls under the class of assets in that list, then it automatically belongs, or it's automatically classified as qualifying capital expenditure. That's by the way, anyway. So let's go to allowance, initial allowance. It is an allowance granted to a taxpayer in the first year an asset is put to use. It is not granted on second-hand assets apart from building, basically. Yeah, it's not granted on second-hand assets apart from building. So let's just pick, and it is granted, obviously, at a rate prescribed by the tax authority. So it is granted at a rate prescribed by the tax authority. The second one is annual allowance. What is annual allowance? Annual allowance is that kind of allowance. This is an allowance granted to a taxpayer over the estimated useful life of the asset. Obviously, the estimated useful life in this case is determined by the tax authority, not personally, right? I need to say this now because we'll be manipulating a lot of questions. So it's granted to taxpayer over the estimated useful life. And again, you don't forget that your rate speaks to your useful life, basically. So the rate the tax authority gives us, which is conventional across board, will be the estimated use, will determine the estimated useful life of the assets. Does it make sense?
Yes.
So the tax authority, so the taxpayer is expected to remain 10 naira as tax written down value of the assets until the asset is disposed. Right? So it means your annual allowance in the final year of the asset will be less 10 naira until the asset is finally disposed of. So again, your tax return value is what you would have referred to as your carrying amount. And again, it's just, your carrying amount is cost minus accumulated depreciation less impairment loss. But in the context of this class, we don't use depreciation, we use allowances. So your cost minus allowances will give you your what? Your tax return value. Right? So now, let's look at how do you compute your annual allowance. So first one, for in the year of commencement, for a business that just commenced, or let me put it in words so that it will make more sense. Annual allowance is prorated down to the number of months in the basis period on the, or say, number of months in the basis period for a commencing business, for a business under commencement. For a business under commencement. All right. The annual allowance is prorated as the number of months on the basis period for a business under commencement. So now let's look at it. For a commencing business, your annual allowance is cost minus initial allowance times the annual allowance rate. Cost minus initial allowance times the annual allowance rate, then times number of months divided by 12. That's it. For an ongoing business, right, you would always have it to be cost minus initial allowance times the annual allowance rate, or cost minus initial allowance divided by the useful life. Please, can you still hear me?
Yes.
Yes, sir.
Now, in the case you prorate at commencement, in the case where you prorate at commencement, where there is proration at commencement, that so subsequent year will be your tax return value for the first year divided by remaining useful life. Don't bother yourself about this. Or we can say tax down value divided by estimated useful life minus 1. Whichever works, you are going to get the same answer. That is that about annual allowance. Are we good to go? Talk to me. Are we good to go?
Yes, sir. Continue.
So now the next one we have is investment allowance. What is investment allowance? This is an allowance granted at 10% of the cost of plants and machinery or plant and equipment in the first year. An asset is put to use. In the first year, an asset is put to use, right? But it has been scrapped. Based on Finance Act 2023, investment allowance is no longer was not granted to assets purchased after September 2023. All right, Joshua, your hand is up. Ume, your hand is up.
All right, sir. So my question is for that formula that I gave, tax written down value divided by estimated useful life. That minus 1, is it for the numerator or the denominator, or when we have divided, subtract
No, it's,
one
it's
from
for
it?
the
Which one, sir?
denominator.
Okay, thank you.
All right.
It's for the denominator.
Thank you. My question is that, hello, can you hear me, sir?
Yes, please go ahead.
All right. My question is that I don't even know how to take it. Okay, I was solving a question. Now they bought a plant, maybe at the beginning of the business. Okay, blah blah blah. Now again, they now buy another plant again after like 2-3 years. So industrial plant, it will attract investment allowance. So I want to ask, in that case, are we going to now remove investment allowance on the new assets too? We remove investment allowance on the one they first buy. So what about the second one they buy
It's
again?
granted on assets. It's granted on assets and not the entity. So it doesn't matter. It's individual assets enjoy investment allowance.
Yes, industrial plants. At industrial plants, we charge.
I get your question. I'm saying that individual plants will enjoy investment allowance, or will be granted. You will be granted in allowance on individual plants, not as an entity.
Okay, so even if they buy like 3 industrial plants, we charge investment allowance on all the 3.
Yes. The only thing that will make you not to get allowance, right, is you purchase after September 2023.
Okay.
Yeah. But if it is still before September 2023, then you will be granted investment allowance.
Thank you so much, sir.
You're welcome. Do you have another question before we move on?
No.
All right. That's that about investment allowance. Another one that looks like it has also been scrapped. Rural investment allowance. So it is granted to taxpayer who provides water, electricity, and tarred road for their business environment. But this is one of the most absurd laws I've ever imagined in my life. For you to enjoy, for a taxpayer to be granted this allowance, facilities provided must be 20 kilometers away from where it was initially provided by the government. You are laughing at me. You see the sense there, Abi. So it's one of the most, if not the most absurd, then it's one of the most absurd. Because I don't see anybody who can start 20-kilometer road as an individual. Because 20-kilometer road, if you don't want to exaggerate, and if you are doing 80 kilometers per hour, 20-kilometer road should be what? 80 divided by 60 times 20. That's 26 minutes drive. Is that it? Yeah, 26 minutes drive. No, that's not possible. Or let me check it again. 60 divided by 80 times 20. Okay, 15 minutes drive. That's still fair anyway. So if you are providing water, the first water that should be exist should be 20 kilometers away. So you should light too, you must do 20-kilometer pole and all that. So does it make sense? Do you understand? But it has been scrapped too. It's no longer granted. All right, so and let's now move to conditions for granting allowances. Number one, the ownership of the assets must not be in dispute. Right? The ownership of the asset must not be in dispute. Another thing is that the assets must be put to use in the year of assessment. Yeah, Stella, please go ahead. Stella, your hand is up. Okay. I want to believe that was a mistake. So the assets must be used for the purpose of trade, right? For the purpose of trade. Then, by trade I mean business. Let me just put it there. Number 4 is that for assets whose value are above 5 million naira, there is need to receive a certificate of acceptance of fixed assets. CAFA. Right? Any question?
Sir, where would the CAFA be collected or received? Was there any special?
It's from the Federal Ministry of Industry.
Can you please help us put it? Thank you.
From the Fed. Yeah, thank you. Ministry of Industry. That's it. There's one I think I'm missing.
Period
Okay,
of
yeah.
Temporary disuse must be disregarded.
That's not it. But that's part of it. But that's not even what I want to remember. Yeah, the taxpayer must claim their allowance. Must claim the allowance in the year of assessment. So what I mean there is that you must not like you must write that you like you must compute it and you must claim it before it's not automatic, basically. That's it. So you must do something. Then, like you said,
there must be an application in writing before it is granted. There must be an application in writing before it is granted.
No, that is for assets above 5 million. That's when you get your CAFA. That's where application writing is utmost important. But again, the one I'm talking about here is that you must compute it and then show the schedule. So it's not that because you buy an asset, right? Say 400,000 assets, and the asset is or the asset can get allowance. So because you buy it does not necessarily mean you will get it. You must still claim it before you can get it. Do you understand what I'm saying? So now let's look at restriction of capital allowance. And that's what he was saying. So there are two reasons why you can have restriction on capital allowance. The first one is where an asset is used for both business and private use. The allowance claimable shall be prorated to down to the only portion used for business purposes. That's one. Number two is the capital allowance claimable in a year of assessment is restricted to 2/3 of assessable profit. So again, so that I don't confuse you, 66 1/3% or 66.67%. They are saying the same thing. Of acceptable profits in a year of assessment, apart from for manufacturing and agro-allied business. That's one thing we want to also note. So number three is where an asset is temporarily out of use, capital allowance shall not be claimable.
Please
mute your mind.
Please mute.
For such period. All right. Shall not be claimable for such period. That is that about restriction of capital allowance. Now let's look at one other thing is capital allowance and cessation. Of business. Right? So where a business, are you with me? Are you getting anything from this class?
Yes.
Okay. Where a business ceases operation with unclaimed capital allowances. Such allowance can be relieved or utilized, that's the word, utilized backward for 5 years, beginning from the penultimate year. I hope penultimate year. I hope this penultimate year will not cost me another while again. But obviously that was a joke anyway. I'm sure everybody on this call understand penultimate year. And thank God I took the pain to explain penultimate year before. All right. So what we are saying is that where you cease operation, all right. So and you still have some unclaimed capital allowance, unutilized capital allowance. So such allowances you can utilize it backwards, right? You can utilize it backward for 5 years, beginning from the penultimate year. All right, so that is pretty much it about capital allowance for now. So like I said, against next class, I will send 2 or 3 illustrations for us to quickly play with, and possibly we will keep up from there. Do you have any question for me?
Kindly, please, sir.
Exactly.
The capital allowance note.
The
Can you
last
put it back?
sentence.
So I can write the last sentence.
Now I'll share
please.
with you.
Thank
I will
you.
share with you your notes now. I will share the notes in your group now. It's for you.
Thank you so much.
Okay, sir.
You're welcome.
Please, sir.
You-
This
I wanted to say
this
you're
finance
welcome
act.
so much.
This finance act. Hello, sir. This finance act.
Hello?
Yes.
Is it 2019 or
Hello?
2023?
Let's take
Yes.
let's take one after the other. So
Hello, sir.
Hello?
now, yeah, is it the one that scrapped? Are you talking about the one that scrapped investment allowance?
Yes.
2023.
It's 2023.
Yeah, it was Buhari's
Hello?
final act
Okay,
that
sir.
scrapped it. Yeah, please go ahead.
Hello?
Yes, I'm with you. Please go ahead.
Sir, can you share your news, sir?
It's for you. I will share it in your groups.
Okay, sir. Thank you, sir.
You're welcome, sir.
Hello, good evening, sir.
Yeah, good evening.
All right, sir. Sorry, please, I have just 2 questions. For the purpose of exam, do we still need to understand what we mean by balancing allowance and balancing charge? Then secondly,
Okay.
For we leave for terminal capital allowance, like if a company has an unabsorbed capital allowance
That's what
in
I
a
just
year
explained.
of cessation. Okay. So
That's
how do
what
we
is called
set
terminal.
off? Okay.
So that's what you call terminal allowances. That's what I was saying, that so you do 5 years free. You count from 5 years. That's it. Like I said, you like technical term in this class. So let me put it here: terminal allowance. Maybe that will make more sense. But that's what the terminal allowance is. That's right. You have beginning from the penultimate year to utilize your allowance. Does it make sense?
All right.
Yeah, that's that. So now let me, since you've said it now, let me just quickly go straight to that.
Okay.
So balancing adjustments. Let me explain that. Balancing adjustment. So balancing adjustment is what you would typically refer to as gain or loss on disposal, right? Is what you would, again, you know, all of us here, I'm using gain or loss on disposal because I'm sure all of us are familiar with accounting terms. What we may have issue with is the tax word, but again, all of us know gain or loss on disposal. Gain or loss on disposal will occur when you sell your asset, right? So when you sell an asset, there are three events that will likely happen. It is either you make gain, you make loss, or you break even. But in reality, break-even situation is not what we think, or it's not what will occur on a normal day, or it doesn't have an impact basically. But for when you say you make profit, remember that an accounting person will tell you that you make profit if your carrying amount exceeds, if your sales proceed, the amount you sell it exceeds the carrying amount. Don't forget that in our class here, what you typically refer to as carrying amount is tax return value, right? Is that correct?
Yes, sir.
Good. So if what we refer to here as your carrying amount is tax return value, it means that anytime your sales proceeds, when your sales proceeds exceeds the tax return value. Yeah. The excess, right, is called balancing charge. That's what you would typically refer to as a gain on disposal. Do you understand? So that is balancing charge. Otherwise, when the sales proceeds or let me use the alternative now. When the carrying amount, tax return value, step more than now. When tax return value exceeds the sales proceeds, the excess is referred to as what? Balancing allowance. Yeah. So your balancing charge and balancing allowance is both referred to as balancing adjustment. So balancing adjustment occurs when an entity, or let me say taxpayer, entity, when the taxpayer disposes a qualifying capital expenditure in a year of assessment. Thank you for reminding me. I appreciate it. So again, like I said, this one is what is called your terminal allowances. Your terminal all right. So that's. Does it make sense? Do you get it, or you need me to explain it better? Hello. All right. Please mute your mics if you're not talking to me. All right. So now let's go ahead. Yesterday, your hand is up.
Hello, sir. Yes, I want to ask question on capital allowance based on cessation. Are you hear me?
Okay. Yes, I can ask.
That if the company has 6 operations, and they did not have anywhere they can deduct the capital allowance, can they move it to the another company?
No, now.
Or is
all of us.
Or is basically
they gave birth to us differently now. They gave birth to us differently. So why should I move it to another company?
Oh, wow. I just want to clarify it. Thank you.
Yeah, I know. I'm only saying that it doesn't. It negates every law that I know to move it to another company. All right. So,
Okay.
Kayode, was that a mistake?
No, you've answered my question. I have not lowered my hand. Thank you.
Okay. All right. So, do you have any other question for me? It's like we'll be praying. You guys will pray that people should not be many in the class. I think it's the volume of people in the class that affects the network. Is my assumption correct?
No, sir.
But I think so. Possibly there's it has to do with bandwidth or something. I think so. Because now, since the population is below 90, I've not had network issues.
It's like the network is more fair at this night.
Yeah, possibly that's to do with. Okay, the step model of the crowd. All right. So, do you have another question for me before we call it a night?
Yes. Hello, sir.
So, if there are no questions, thank you very much for coming.
Sir, my hand is up. Oh, my hand is up.
Okay, Nena, go ahead.
Good evening, sir.
Good evening.
Please, I want to ask a question regarding when a company is ceasing in its business operation and then pertaining to capital allowance. You said that the capital allowance can be moved backwards for like 5 years, right?
Yeah. Yeah.
And I want to ask, what if the company, they file their CIT on a yearly basis and they pay their tax? What if the company have paid their tax up to that particular year that they cease business? What happens to that capital allowance? How would they take it back?
Ideally, you are supposed to get your refund.
In Niger?
Okay. That's why I know you are going to say Nigeria. That's why I use the word ideally behind. Because although I'm still young in practice, but I've not seen anybody got refund from FIR, although I'm still young in practice.
Okay, sir.
I don't know if anybody has seen refund before. If you still refund, please share your experience. Okay, Benga has seen it before, Abi. Benga, please go ahead.
What of it? Yes, sir. Yes, sir. What of it? The company have not spent 5 years before the cessation, sir. What will happen?
You claim the one you can claim. Every other thing is law in the end. It's gone.
Okay.
So it's the 5 years is just the maximum. You can claim it. So
thank you.
If you like, you can do just 1 year, move on. If you like, you can never see them at all. But the 5 years is just the maximum threshold set for companies. Yeah. Yeah. Ume.
Okay, sir. So I just want to I really appreciate the teaching, but I feel it's better you check on the YouTube family because it's not really easy joining from that platform, especially when we have questions. They'll keep dropping down. Nobody.
No, I used to try just
answer them.
I used to try as much as possible to make sure those on YouTube follow me.
Oh, okay. Thank you so much.
Yeah. So you are saying it.
I raise up my hand again, no.
Okay, you are saying it for the sake of the days you join it again.
Yes. Then I can testify. Seriously, it's not really easy joining classroom here. It's just as if we are in another country. Like nobody is just paying attention to us. But anyway, thank you so much for your
No problem. But I will make sure.
So I'm still raising
I'll
up
make
my
sure.
hand.
Yes, I will attend to you. I'll make sure I attend to everybody. Sorry about that. Okay. Yeah.
Yes.
Ogbonabi.
Yes, sir.
But yesterday,
Hello, sir.
and yeah, yesterday, please, guys.
Yes, sir. Sir, there's this question that used to bother my heart as regards to taxation. Based on this basic period, can you hear me?
Yes, I can hear you.
Please, how can we relate it to company income tax question in an exam scenario?
Don't worry, you are moving fast. You will relate by yourself.
Okay.
Trust me, you will relate it by yourself. Nobody will relate.
Okay.
You will relate it, don't worry.
Okay,
Just don't
thank
worry,
you, sir.
you are moving fast.
Okay. All right, thank you, sir. God bless you.
You're welcome. Let me just say it, just for the sake of it and for the humor of it. I'm not sure you can complete question 1 without understanding basis period and capital allowance. That's why I took my time to explain it that way, because like if I had not explained it the way I'm explaining, I would still want to suffer it later. It's better to suffer it now. Although I will still suffer it later, but let's assume I suffer it now, so that I will not suffer it later. All right. So, any other question before we call it tonight?
Good night, sir.
Yeah, good night, everybody.
Thank you. Bye-bye.
Good night, sir.
Monday.
Good night, sir.
Enjoy your weekend. Happy Monday in advance.
Thank you, Mr. Alabuni.
Students,
Thank you.
you don't
Good
have
night.
weekend though. You don't have weekend, students.